July 2026. A rate hike. Back on the table. The Federal Reserve just dropped minutes that are sending shockwaves through markets. And most investors are still asleep at the wheel. Here's what's really going on. And what you should be thinking about right now. Most Fed officials, not a fringe minority, most, are now openly signaling they'd support raising interest rates again if inflation stays hot. This came straight out of this week's Federal Reserve meeting minutes. Black and white, no ambiguity. Bond markets are already pricing in the pain. Yields are climbing right now. A signal that fixed income traders believe current rates aren't doing enough heavy lifting. Economist Ed Yardeni, one of the sharpest macro minds on Wall Street, is warning that bond vigilantes are forcing the Fed's hand. When the bond market speaks, the Fed listens. Here's your viewer impact. Higher rates mean higher discount rates. Higher discount rates crush the present value of future earnings. Growth stocks get hit hardest fast. And if you're holding long-duration bonds right now, you're sitting on a price compression time bomb. Every basis point higher in yield chips away at your portfolio value. But here's what nobody is saying about this yet. The Fed isn't fully in control anymore. The bond vigilantes are. Yardeni coined that term back in the 1980s. And they're back with a vengeance. These are the massive institutional players who sell Treasury bonds to protest loose fiscal or monetary policy. When they sell, yields spike. When yields spike, the Fed gets boxed in. They can't cut, they have to hike, or risk losing all credibility in the bond market. That's the real story here. This isn't just about inflation data. This is about who's actually calling the shots in 2026. The Fed, the bond vigilantes. July creeping closer. What do you think this means for your portfolio? Drop it below. Let's talk it through. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.